All right, so I had always explained the concept of liquidity and understanding internal liquidity and external liquidity. And I've always talked about how to identify shifts and then how to understand the delivery of liquidity. Okay, so when we talked last week, we were dealing with this range, right, as a level of supply, okay, that has this internal liquidity by virtue of this 4-hour fair value gap within, okay? And I explained how we could be heading for that area or possibly this area as the extreme, right?
Yes, you did.
If price fails to continue with the demand, okay? So we had come into this range to tap in internal liquidity. So I'll just mark that out properly. Okay, we had collected internal liquidity from this range from last week. Though we'll obviously break down to see lower pricing. Okay, but then we just need to clear this. So we had tapped into internal liquidity by virtue of this fair value gap, right? It only made sense that we took out these highs last week as external liquidities. Okay, and then we should expect further delivery. Okay, because we now have a new tendency of coming back into this range to create some sort of internal and external if that's our price action presents itself. But then we still need to observe that those highs are still very much protected, hence supply is still very much in fetch. And then if this low is our root low or our current low, right, the 4-hour low, okay, if it has failed to take out this high, then we could see further declinations. But we cannot obviously say that until, because this is a grab on internal liquidity, right? I'll break all of this down on the lower 10K, right? Why is this a grab on internal liquidity, especially delivered by virtue of this favor event, right? So we might have taken internal to continue further move for external, but I think Monday price action should determine that. But if that continues, I obviously have reasons why. We obviously have reasons on the chart why we could see further movements to the upside, but then we are not trying to predict, we're only trying to play along with the price action. Okay, by price action, I will always be referring to the behavior, the current behavior of price. Okay, so we're trying to run through a top-down analysis on what we have currently on price. And then we have seen that with respect to the 4-hour leg or the 4-hour range, right? This is the structural high. And everything forming above this place is a range structure. Range structure because this is obviously the best pricing for markets before further move to the upside or further declination, right? And then we're yet to visit this point. And then why is this the best pricing? Because it's obviously this structure. Okay, it's obviously this structure, right? So it only makes sense that we have this structure back into internal ranges to kind of play around these flip zones and then see what we could get out of that. But then we still keep fingers crossed. And at the time we are dealing with this range. Okay, so this is range structure outside the original 4-hour structure. This is the range structure. Okay, range structure because we have failed to come back into more discounted levels, right? And then this is an algo candle because we have liquidity and then we have escaped aggressively. So, and then regardless of that, we have failed to come back into discounted levels, right? If this should be some sort of breaker blocks to some sort of flip zones to give us further moves to the upside. So at the moment, we are only dealing with the price action present in this range. Okay, and then we have been in this range since last week, right? Since on the 11th of November, okay? I think it's 2 weeks ago or last week, yeah. We've been playing inside of this range. So we're just concerned about the price play or the price delivery inside of this range. And then all of this is just range structure. Okay, so when we've left this area, we can now begin to look to follow the actual 4-hour price play structure. But at the time, we're just concerned about the story instead of this range structure. So what is the story? 4 questions technique, right? Where is price currently? And then price has just reacted off an area of supply, and then we have tapped into an area of internal liquidity, right? So we need to understand what is the price action in that area. If we need to get a framework of what we'll be working with in the coming week. Okay, for the new guys who are on here, I hope I'm not talking too fast. I'm so tired. Like I've been yawning on food. All right. And then my network is not even open. I want to still believe I'm as audible as I can get so everybody can hear me. I'm waiting for the network to come in. It's kind of poor at my end at the time. All right. Okay, so obviously we can see this low as the last M15 leg. Okay, so if we're going to trace this from the story we had prior to this time, to this point, right? And then we have just taken out this structural high. Okay, the basic market structure only makes sense that price comes back into this range. Okay, but then let's forget about that. We have this as a trade zone or as a target. The price could react from in the future, should need be. Okay, but then let's try to play around what we have here currently that should be responsible for the price play we'll be working with probably for Monday, Tuesday, or even after then. Okay, so let's look at the delivery of price. Let's look at the delivery of price inside of this range, right? I'll have to give you 3 minutes so I can get you that detail. 3 minutes, 3 minutes, 3 minutes. Can we do that? So on Friday, we had very, very pretty price action. I had drawn through this with a few other guys on the mentorship within the week. And then we understand what was happening inside this area. I'll just go through that again so we can arrive clearly at the story we'll be looking to play with or play from in the coming week. Okay, so let's try to get our Thursday pricing. Yeah, actually, it's 4:30 a.m. to 10 a.m. So let's get them there. All right, so this was Thursday, right? Okay, so let's go through the story. Now, initially on Thursday night, right, or Thursday Asia, right, Thursday early morning, Thursday 4 a.m. Nigerian time, we had tapped into this level of external liquidity, right, that I had marked from the 4-hour time frame I explained to you guys. So let me just clear this. So we had tapped this external liquidity and then we were beginning to see some sort of declination. Okay, so we had to wait for the open of the day and then my learning session to come in to now begin to give me moves. So what we clearly did in London was to actually project this properly. So I take this down as a grab on liquidity, right? A shift in momentum, right? And then actual break of structure. Okay, looking at this from this time frame, right? So in real sense, I'm concerned about this high. Okay, why am I concerned about this high? It's because we have this internal story here of internal liquidity taking, right? And then we have this area shift in momentum, right? I'm just trying to explain the fractal nature of price. So the same story we have on the large scale is still present inside of this range. And then we have all of these highs try to make an announcement and then finally broke structure, right? After this highs, okay, this last high, and then took out the structure, which is the same structural low. Okay, so internal shift in momentum, right? And then you understand that we are always concerned about the guy who is responsible for the break of structure. Okay, so these highs are responsible for the break of structure with respect to this story I've explained. Okay, so we are working with two waves, right? Wave 1, wave 2, wave 3, right? So the high of wave 2 usually has our juice. Okay, so that should be the internal target for the liquidity to be taken. And then price came to be just that. And then we could have this as our first target to deal for. Okay, the only time I'll be looking to work with this range, right, as my internal liquidity to be taken will be after this has failed, or if this fails, then I can look to now take a new entry on this and protect this high. Or if I want to be too conservative, I can just take the whole area on a 9.6 pip stop loss. But then I think that's not bad. It's still structure. That's what the structure presents. But then I'll rather split it in two and then go 0.25 this stage, 3.5, and then this should be at another 3.5. The name is taken approximately 4.9. So that's same thing. 9 pips still above for both of them. Okay, so we had this delivery to the downside. So we are taking internal liquidity from this range. Okay, the next target automatically becomes external liquidity, right? So we had, okay, all right. Nice. So let's finish that. So we had this loan taken as target external liquidity, and then the price just has to come back for internal. Okay, so whenever we take external liquidity, we are coming back for internal rather. And then for some of you who followed through with this price action on Thursday, we had this amazing buy scenario inside of this range. And then I was talking with Choco the other time, and then I told her we had a trade zone above that could militate price from going higher, because obviously I wanted this move pretty bad. I wanted this buy move. I wanted the highs to be cleared and all of that, because I was still in tune with the story that was happening internally. And then I was expecting all of this to be range structure and expect price to just come back for internal and then clear the whole high as external. Okay. But then because price was more interested in reacting from the supply it had taken, we just had to work with the price action that was present. Okay. So for a few of you, and then I'm sorry I cannot do this on the 1 minute time frame because TradingView would not allow me access to that data until I subscribe. Probably I will do that tomorrow morning also. Okay, so a lot of us would have expected these highs to be taken out, right? Okay. Can you guys hear me now? I think the network is very bad, so it took me out. Can everybody hear me?
Yes, yes, sir.
All right, I'm having my network is quite poor, man.
Yes, sir.
Finding it very difficult to copy this code. All right, let's play. Okay, so where did I stop? Let's get that. Where we? All right, cool. So a lot of you guys
discussing with Choco.
Yeah, Choco, I know I'm discussing with you. Thank you. Okay, so a lot of you guys were obviously expecting these highs to get run, right? But the fact is that we did not have a reason to run those highs, because this high was actually playing off this range as a breaker block. Okay, so we did not have reasons to run these highs, right? We could only mitigate that because those were basic transfer of funds. And then we've had lots of transfer of funds. For this week. Personally, I was looking forward to shorts from this area. Okay, so we can see that clearly we had just tapped into that exclusively and then we began to tank. Okay, so we'll come back to that pricing, but then let's deal with this and then see how I would have taken advantage of that. So personally, I was already trying to engage from these areas to shorts, right? I was engaging from these areas to shorts already, and then for some reasons, did I stay in? I was break even at this point. Right? Because I already had open sellers inside of this area. Okay, I had sell positions open here, so I did not want to come in on too many positions. So this got stopped out at break even, and then the buys got taken out in the partial. But then that's not what I'm concerned. I'm just trying to explain why we shouldn't have looked to clearing this high, maybe at this point. Okay, probably at this point. And then we have some other price action at the left that played out. We'll discuss that together at the time. So we came in and then mitigated this block closely and then came to take out external liquidity, right? Now, if we take this as external and come back for this range to mitigate and then take internal, okay, it only makes sense that this becomes the new target external liquidity, right? And as soon as we are taking this external liquidity, we just have to come back for external. Okay, so basically a lot of us would want to engage from this point, okay, which would have been the best point for me to engage. Well, like I explained, we've had lots of transfer of funds, lots of major transfer of funds from origin to origin, from origin to origin. Okay, this is the full transfer of from origin to origin, right? We still have the same thing happen here. Okay, price still came back, origin to origin. Then if you observe, the high is still protected, right? So we never broke this high, right? That's the high there. Okay, so we're still in the range. So if you got in here and then you were willing to have your stop loss protect the high, you were still quite safe. And then you're still very much in line. For some reasons, I think Q4 has its basic behavior. We're trying to, if you have questions, can you please ask? I'm also finding it very difficult to open the chat box. Like I cannot see the chat box. It's not opening at my end. Show chat previews. I can see that. I can see that. I don't know what the problem is, but I'm finding it very difficult to see that it's not popping up. Okay, I'll make chance for questions shortly. Okay, just give me a minute or so. Okay, when I'm done with this explanation, I'll do that. Okay, so we have basic transfer of funds at this point, right? So price tapped into our liquidity level, gave us a reaction, and then went back to mitigate the other block, right? The same thing happened here. It tapped into our liquidity level, could begin to move already, but still had to go back to take the orders inside of this area. So still basic transfer of fund, right? So if this is the internal liquidity that has been taken, the new target just automatically becomes the external liquidity, right? So let's mark that out. And then I explain something here about the delivery of internal to internal, right? So this would make more sense now because we now have this range as a grab of, okay? Now, when I had a session with Ghost. Is Ghost on this call?
Yes, I am.
Okay, good. And then we talked about this. So obviously, I would not have seen this play out because I would not be concerned about this breaker block. The only thing that would drag my attention to that breaker block will be when I see the aggressiveness, okay? Because this is very pretty bearish momentum, and this is also a very pretty bullish momentum escaping from this area, okay? So it brings me to wanting to know why this sort of momentum if we are experiencing this level of bearishness, okay? So that would now bring me back to understanding the fact that we have a breaker block here that has just been mitigated, and then everything here has been taken as some sort of internal liquidity. Okay, so price came back to tap into that range, and then we have this high cleared, right, as a shifting momentum, right? So this becomes the first wave, second, and then third. And then obviously we should have juice resting below our second range, okay? Because that's where our liquidity levels, that's where our liquidity lies, right? So we should have juice resting below this range. All right, I explained that with him when we actually talked on the call as well. Okay, so which automatically makes this a threat zone. So I'm looking forward to seeing some level of threat from this zone, threats from this zone because of the story that's been present. We've fairly mitigated a breaker block, we have shifted momentum, and then we have continued to break structure. Okay, so it automatically makes this a threat zone. Okay, so let's see how price decided to play around that point. Okay, blah, 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 and blah. So it came back and then we tapped into this. Okay, but then after we did this and did this mitigation, right, did we take this out? Did we take this out? Did we take this out? This would have not been fine for those of you guys who don't trade in zero spread accounts. Okay, because we didn't have the perfect, it was just a mitigation. We didn't have price come into your range to give you that 2 pip spread or 1 pip spread, as the case may be. Okay, so within this range internally, we have also delivered external liquidity taking, and then we have this range formed, and price went back to take internal liquidity, and then came back to clear these lows as what external liquidity, and then tapped into this range. Now, understand something. Whenever we have a delivery of price from internal to internal, it clearly indicates a change of direction most of the times. Okay, so we have just come from a level where we took internal liquidity. Let's even assume we did not see this breaker block. We have just taken internal liquidity, and then by default, we should have eyes on what? External liquidity. But price failed to do that. So we grabbed internal liquidity and then continued back to this point to take what? Internal. So the delivery of internal to internal originally or basically spells a change of trend. Okay, so whenever we have internal to internal, look out for a change of trend, okay, on the time frame that you trade. Whenever we have external to external, it also spells a change of trend. Okay, so we grabbed internal liquidity from this point that was supposed to now take us all the way to clear this low, right? But then we came here and then we grabbed internal liquidity from this trade zone. And what did we do automatically? It only now made sense that we can now deliver this high as external liquidity. Okay, so let me clear this out and clear this as well. So I'm sure I'm marking the right story. Good, nice. Okay, so you must always be careful enough to understand the order flow and to know when the liquidity changes or the liquidity cycle is changing. Okay, when it's changing from internal to external, or external to internal, or internal to internal, or external to external. Okay, am I making sense? So as soon as we took internal liquidity off this range, mitigated this block, right, and then came back here to take further internal liquidity, right, it means that we now have internal to internal. The next range cannot be internal. We cannot have 3 internal ranges in a row. Okay, so if we've taken internal and then we've taken another internal, it only means that we are now changing to some bullish trend. Okay, because the delivery from internal to external is the cycle for a bearish trend. Okay, in the bearish liquidity cycle, we are taking internal liquidity and then delivering it to external. Now, what are the external liquidities for a bearish market? All old lows are external liquidity for bearish markets, right? So all old lows, or what you choose to call your, what's it called, lower lows rather, sorry, forgive me. Your lower lows are your external liquidities for bearish trends, right? So once we took internal, delivered to external, so let's trace the story from here. So internal range, delivered to external. We came back here, took internal range, right? Mitigated this block, delivered to external. We came back here, took internal range, did a full transfer of front on this block. We were supposed to continue the delivery back to where? To external, right? But that failed to happen because we had a trade zone because we were reacting off a breaker block, and then we just came back here to take internal. So we now have a delivery of what's internal to internal, right? And then once that happens, we have this right to this. Once that happens, by default, the next target should now be this high as external liquidity. Okay, so we have price move aggressively back to that point now to now take external liquidity. Okay, did we have a confirmation how we could hop in on this move? Hell yes, we did. Okay, so this was sorry, like I said, I can't use the 1 minute time frame. It should be able to give me all the details I needed inside of this area, but then for whatever it is worth, okay, grab the liquidity, and then we shifted this as a breakout structure. So shifted momentum, breakout structure, price came back into the range to clear these lows. Okay, so if we're dealing with it from this time frame, we can now use these ranges inside here as some sort of internal liquidity that confirms the story, right? And then we can now be able to work with this M15 range. But I'm certain I would definitely see the fair value gap or something of that nature inside of this range from this low to this week, okay, between these areas, right? I'm certain I have food within these areas that should be attractive for price to come back into this range to do this on the 1 minute time frame. But then I can't see that at the time, so you can check that out on your trading view and let me know if I'm correct, or if that was just a full mitigation of all the blocks. Okay, so we had price come back into that range and then move aggressively to clear external liquidity, right? So once we clear external liquidity, what is the next target? Internal liquidity, right? So once we take internal liquidity, what becomes the next target? External liquidity, right? This is the next external target, right? So let's see that, yes, nice. So pinch, 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 pinch. Now, okay, so another delivery, we have now delivered internal and failed to take external. Now, let's follow the story again. We are taking internal liquidity here, right? And then we had gone for the target external. Okay, so we have taken another internal liquidity here. What was supposed to be the next target? External, right? But then we have failed to deliver external. We have just moved from internal to internal. Now, what did I tell you about whenever we have liquidity going in the same direction? It signifies a change of trend. Okay, the same thing happened with the story here. We took this here as internal liquidity, right? Internal liquidity here, and then failed to take the target external liquidity, okay? Because this is still inside of the internal range, okay? I still address this as internal liquidity because it is still inside of this leg. Anything inside of this leg is an internal range liquidity, okay? We can only deal with externals below or above, okay? So we took internal here and then came back for internal. We are doing the same thing at this point, playing between ranges. We have come down here to tap internal liquidity, right? And then we have come here. And instead of taking external liquidity, we still tapped into more internal liquidity. Okay, which now spells for us the sell momentum, right? Now, some of you may not be comfortable with dealing immediately from this range. You want to get some certain level of confirmation so you're sure of what you are doing and all of that. So we have price tap into that liquidity and then give us this here as a shift in momentum and then give us this as a break of structure, right? So we have structural point shifted at this point. Who broke the structure this high, right? So the guy, so swing 1, 2, 3, the top of swing high 2 has my juice, right? So price came nicely, tapped into that high for swing high 2, and then gave us the delivery to the downside, okay, for our sell entry. If you wanted all of that confirmation, protecting this high, and then target external as take profit 1. And then you can now choose to extend over the slides, okay, all the way, and then trail your profits as the case may be. Now, as soon as we did this, right, we have grabbed internal to take out external, right? And then we have continued to further take out this external liquidity. It only makes sense that we come back for internal, okay? Where's the first target for internal liquidity? Last point of week before the inefficiency, right, okay? Last week before inefficiency, okay? Now, if you use this area, you are also correct, okay? It just means you'll have to control a larger area for your stop losses, okay? Because I will still be protecting this high. That's a 14 pip stop loss instead of an 11 pip stop loss, okay? So regardless, that's what I'm willing to deal with, right? And then extend. Okay, so we have price reacting off that level. So if this is the actual internal liquidity we are working with, and then price has just delivered into an internal range, it is supposed to come back now to target what? The external range liquidity. Okay, so it is quite possible for us to see that move happen at the opening of London tomorrow. And why I say expect price to come into these deeper ranges. Why? Okay, is because here we have this area as a grab on liquidity, right? A grab on liquidity, we had shifted structure, right? And then price had come back into this range and then tried to give us some setting sell kind of feel, but failed to hold, okay? Which automatically makes this a supply broken, transfers power to the demand that broke it, right? So we are yet to see price react off this level of demand. So it automatically makes this level of demand a trade zone, a possible trade zone where we could see possible reactions from, because that's a valid flip zone. That's a very valid flip zone, okay? So personally, I would like to mark out these whole areas, okay? And then look for the reaction inside of the areas. So when price gets into these areas, I will now be looking forward to seeing the reaction that sponsors my sales, my buy setup, as the case may be. So we can now see this as a full M15 leg, okay? We can now see this as a full M15 leg. I'll trace the story with you now very quickly. Okay, we can now see this as, okay, structural shift, and then a comeback for internal liquidity, and then grab into breaker blocks, another structural shift, right? And then a comeback for internal liquidity or a grab into breaker blocks, right? And then we can now see this highs as another structural shift and fail to come back, right? Giving us another trade zone below, but then I'll address that, okay? So once we pulled out from this structure, we began to create new range structures, right? We shifted these highs, and then we came back into the range to now play with this breaker block, okay? And then we shifted these highs, And then we had come, after taking external, we came into the range to work with internal liquidities, right? And then, okay, nice. So we had dealt with this already. Good. We had dealt with this already. So let me just mark this as internal range. So this is taken care of as an internal range, right? So the delivery has been quite okay from this point, okay? Until we got to this point, price now decided to exclusively work with all of this range structure. So the same way we had abandoned this place earlier, okay? And then continue with all of this range structure, only for price to come back into the range to tap into the liquidity at this point before moving upward. It's the same way we could possibly do with this area. Okay, so this could now be a completion of this swing leg to come back here and then give us this move to the upside. Okay, it's very possible that we can see that happen. Does that make sense? Any questions? Please, if you can hear me, let me know you can hear me.
Yes, sir, I can hear you, but the network is breaking. So can you please do a recap of what you said?
Okay, I think that's from your network. Any other person having network issues? So I know if I can, because I just have 4 minutes left in this call. So I know if I can do that recap now.
Yes, sir. I'm also.
You hearing me, right?
Yes.
It's pretty clear. Yes, it's pretty clear.
Okay. So if you have issues with your network, you'll be able to listen to the recording. So I don't have to do that much time on this call. I'm pretty sorry about that. Okay, so what are we expecting this week is for further bearishness to complete this leg. Let me see if I can see a bolder picture on the M5. Okay, because on the M5, we had grabbed, let's see that play. Nice. Okay, so on the M5, we had grabbed this external liquidity. I marked that from the 4-hour time frame, right? Okay, we have grabbed this high as an external liquidity, right? You can see this. So it's only possible that we can come back to do, okay, so it can be this, take out external, come back in here for internal, and then continue to move to the upside. Okay, let's see pricing. Let's see pricing, if that's discount enough. Let's see if that's discount enough. I doubt that's discount enough, but it's fair. But it's very, okay, quite good, exactly. Nice. So this is very fair pricing, okay? Because this is our equilibrium pricing, which is very fair pricing for the algo to want to move from. Okay, so there's a high chance we could see reactions from here. But then we are not saying we must have reactions from here, but we are saying if we get the desired setup that supports our buy edge, we'll be looking forward to taking buys from this particular range. Because as you can see, this is our equilibrium level, and then the area just lies exactly below our equilibrium level, which gives them a very comfortable pricing to deal from. Okay, everything here, mitigations, okay? So if they need to come low, it means they are coming low to clear all of this. Okay, if they will not be clearing all of this, then they will just be reacting from this guy. I have this guy in mind. Even if I have another trade zone inside of this area, I am more concerned about this guy. Is it possible that it could fail? Very much, yes. I'm not looking forward to making it work. I'm only explaining what I see with respect to the story that I'm conversant with and the price action that I have on my screen. Okay, so if this is an external liquidity taking, we may be looking to take internal liquidity and continue further to clear more external liquidity, which could be the whole M15 high, because I've always wanted this high to go out for some reasons that I talked about last week. Okay. Any questions now? Any questions? I have just 2 more minutes.
I have a question, sir.
All right, please proceed.
Most of the time when I do my back test, I always have an issue.
Okay.
And the issue is marking out my inducements.
Yeah.
Most of the time, what I do is I do see like 3 or 2 levels before my extreme. So
Okay.
if I'm to take the first internal high as an inducement,
Yes.
after that inducement has been taken out, there will still be a level before the extreme.
Okay.
So The issue I do have is I do take my inducement from the second level after the inducement has been taken out. And most of the time, price is going to go far to the extreme
Okay.
and before coming
Now
down
this
or
is
before going up.
this is
Another
how
thing is, okay,
yeah.
sir.
This is what you should do. Okay. Now I have two levels. Let me delete this. I have two levels I will sincerely be concerned about if I was trading this. Okay, if I want to work with this as an internal range, I have two levels I'll be concerned about. Number one is this high, right? Number two is this point. And then I like precision a lot. If you know me, you know I like precision. I like to be on target. I like to hit it once and that's it. Okay. But then, so when I have issues like this, what I do is that I just have a vast stop loss that covers both pricing. Okay. So I split my risks into two, one penny, other here, the other penny, other here, whatever works is fine. I'm sending a new link because this link will be going off in 1 minute. So I'm sending a new link right now.
Okay, sir.